Hello and welcome everybody to today's very special session, live commodity market analysis with the Gold and Silver Club for the 21st of July 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will run through a watch list of trading opportunities, an overview of the commodity markets, portfolio performance, and of course we shall be answering your questions. So as always, we shall keep it very interactive. If there are any questions, any comments at all during the course of the session, do feel free to post those into the chat and we'll make sure we go through those whilst we are analysing the markets. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking Finance Review, The Wall Street Journal, and of course, it's a pleasure to be here today on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.jointhegoldandsilverclub.com. Okay, good. So we shall get straight into it. We're really starting to see the markets pick up some momentum following on from Mario Draghi's speech here. So today's session is slightly delayed, guys, by a couple of hours due to the ECB interest rate decision and also Mario Draghi's speech. The markets have already actually just started to get going on commodities here, which is why we're ever so slightly just had a delay coming on to today's session. But with that, we'll bring you up to speed on what the commodities are doing at the moment, the opportunities that we're seeing in the markets right now, keeping a very close eye on sugar, on coffee, on gold as well. I see some good trading opportunities lining up. So to give you a bit of research on this and a bit of background before we head into each of the charts and we just identify some of the trades which are starting to line up, let me just give you a bit of research on this in terms of investment flow over the last week. So into the close last Friday, our research showed us that hedge funds, they reduced their bullish bets on gold and they switched their focus to soft commodities. So we've seen boosts in net long positions on sugar, on coffee and on cotton. So net long positions across soft commodities, they are currently at their highest on record. And why is that important? It is important because we've recently had a corrective pullback on sugar, on cotton and coffee over the last 3 to 4 days here. Throughout most of this week, in fact, a lot of markets have been consolidating. We've seen some profit taking, but we're starting to see commodities ramp up again following on from Mario Draghi's speech today, which is what I want to identify with you very shortly. We have seen coffee prices surge to the highest levels since February 2015. Coffee prices are currently trading at the highest levels since that point. So we're up to over 1.5-year highs at the moment. We've seen slowing supplies and El Niño weather conditions continue to drive prices higher. Coffee is now up over 35% year to date, with further gains expected. We also saw a runaway move on cotton last week. So cotton prices, they surged by 15% last week and they posted their biggest weekly gain since 2012. Cotton prices up nearly 30% in the second quarter of 2016, which is double the gain seen in gold and oil during the same period. So really, I want to highlight to you some of the trading opportunities that we are seeing at the moment on the soft commodities. And in fact, the reason I've been a little bit just had a delay today coming on to this session is just due to a few setups which are starting to line up. So if we move over, first of all, I'll just talk you through this. The first trade I want to just talk you through at the moment, which I see lining up currently, is on sugar. And this is worth bearing in mind at the moment. So sugar essentially has had a corrective pullback over the last week and a half. We've continued to see sugar pullback, but you can see here it's starting to ramp up. We've in fact broken above the last 3 days worth of highs here. In fact, let me just readjust my Fibonacci levels here for you. And currently it looks like we could be on the verge of a bull flag formation here. We're starting to break out of this. We've been looking at this very closely over the last few days. Sugar is one of the best performing commodities this year. It's been up over 30% in 2016. If you look at where sugar was sitting over the month of April, we've significantly gained. Over April, we came down to $13.84. We're currently trading at $19.66. So it's on the verge of a potential breakout here. So this is a trade that we're monitoring very closely over the course of today's US session. So sugar is certainly a market that I would have on your radar. Now, whenever we do these sessions, we are often asked, we've identified trade setups which we are looking at in the market, but we get a lot of questions afterwards, in fact, regarding the trade setups we're looking at, where you should enter the market, where you should put your stop loss, where you should your take profit should be, whether you should take a pending order, whether it should be instant execution. I will go through that in a little bit more detail towards the end of the session, guys. And of course, all the members of the Gold and Silver Club, they get those exact details of where we're entering a market, where we're putting our stop loss, where we're entering the trade. So I'm sure a lot of you are aware it's not as easy as it sounds perhaps when we're saying these markets are rallying, it's in a bull market. You need to know a little bit more than that. You need to actually have your specific entries, exit, take profit, need to have done your research on these markets, need to know what major news announcements are coming up as well, geopolitical news, supply and demand, USDA reports. There's a lot more that goes into it, weather conditions. So there's a lot that goes into a trade before we do execute it. But by all means, if you would like access to more detailed information, you can definitely get that. We'll talk through that towards the end of today's session, how you can actually become a member of the Gold and Silver Club. But the first trading opportunity I want to point out to you at the moment is on sugar. And that is a market which I see some good upside potential on, and potentially we could really start to get going on this. Now, if I move over next and have a look at coffee, coffee is also looking very interesting today. We've recently had a corrective pullback. We broke out to the 2016 highs just last week. We broke out to the highest levels since February 2015. Sugar pulled back, both sugar and coffee, they pulled back towards the midpoint of this week, and you can see here again where coffee is starting to build up some momentum. It's taken out yesterday's high. We've got some strong underlying support, retraced very close to the 23.6 Fibonacci level, and it's just consolidating at the moment, but it could be getting ready for its next leg up here. So you can see on coffee right now, we do have a nice pennant formation in development. If we breach above that level and if we do follow through, I see some good upside potential here for sugar to get going for the next leg higher, and coffee as well. So again, just going back to that, in terms of coffee so far this year, we saw last week coffee rising to the highest level since February 2015. There's very strong investment demand for the softs at the moment. So we continue to see a lot of strong demand for cotton, for sugar, and for coffee. We continue to see money managers, hedge funds building their positions in these markets. So we could have a lot more upside to come. So I just really want to identify those setups for you at the moment. Now, if we move over and have a look at cotton, which had a runaway move last week, cotton did pull back over the last couple of days. You can see we've formed some indecision candles after it broke out here to 2016 highs. Incredible move actually over the last few sessions last week. Once we broke above the 68 level, we had a capitulation, a runaway move. We've got a temporary pullback at the moment with cotton, but I do expect higher prices here in the weeks to come. And this is definitely a market I would also have on your radar. So again, you really want to take advantage of some of the upside potential on cotton. 4 days last week, we saw cotton surge over 15%. So we had an incredible runaway move and a breakout trade last week. Now, another market which you can imagine we're getting a lot of questions on at the moment is gold. Now, gold is sat at a very interesting level today. So you can see it's holding onto support at the moment around the 1,310 to 1,320 zone. It has had a corrective pullback following on from non-farm payrolls at the beginning of the month. Again, I'm getting a lot of questions on gold. What would be a good entry? Should you get into this market now? Is it poised for the next leg up? Well, today's close will be very important. At the moment, we have seen gold holding around 1,310 US dollars per ounce. I would look at this trade as in two parts at the moment. So number one, if gold was to break down lower and if it was to come all the way back down, you can see we've got some nice underlying trend channels here supporting the price, and also 1,297 US dollars per ounce represents a key underlying level of support. That is also the 23.6 Fibonacci level, and that is a previous level of resistance which is now turned into potentially support. So if we do see gold head lower, I would be looking for investors to pick up some bargains here around 1,300 US dollars per ounce. That represents a good zone of value. That would be a fair corrective pullback following on from non-farm payrolls, where we broke out to 2-year highs, but we saw gold get into an overbought condition, and it's pulled back over the last week and a half here following on from Friday's non-farm payrolls at the beginning of the month. If gold was to continue to rally today, and if it was able to take out the weekly highs, so if gold can take out yesterday's high, if it can take out Tuesday's high and Monday's high and build up some momentum above the key resistance here, which is sitting at 1340 to 1350, I suspect we would then have a bull flag formation here, and this could also give us the next leg higher. I would be looking at this correction then to be over, and then essentially some good follow through. So I am watching out for that, because often after major news items, obviously Mario Draghi's speech today was important, the ECB interest rate decision being kept the same. If we just see gold grind higher over the rest of the US session and towards the close, and ultimately if gold was to close with what is known as a railway candle or a bullish engulfing candle, if it has a similar corrective move to the upside which matches the sell-off yesterday, and we close near the weekly highs here, yes, I do think gold is then poised for its next leg higher. So I would absolutely keep an eye out for that on gold. If it was to just settle around 1,321 US dollars per ounce into the close today, so if it just settles where it is right now, I would just keep this overall formation in mind, that we do have the potential for a bullish flag pattern here. If we break above the 1340 to 1350 zone, that would represent an opportunity to get in at the next leg higher. This corrective pullback is a little bit overdone now. We are starting to get into an oversold condition for gold. However, we're waiting at this point to get into our next trade. If gold did want to head a little bit lower here, down to the 1300s, especially if it got down to 1285, that would represent a good buying opportunity, where I suspect money managers, hedge funds would certainly buy that dip. So that is something to look out for. However, watch gold today. Gold could continue to grind higher. If it grinds all the way up to the 1330 to 1340 zone into the close, that could also give rise to a trade. Gold has not moved much in terms of its normal daily volatility over the course of this week. If you have a look at gold's average day-to-day volatility, it is in the region of 250 points per day. We've had about 3 or 4 days over the last week where gold, in fact, this week in particular, Monday, Tuesday, and also last Friday, where gold only moved approximately 100 points per day. So if it was to gain its typical move, which is 250 points on an average day in terms of its volatility, this is where we could start to see gold ramp up and offer another opportunity for a buy. So I would definitely keep that in mind right now. We'll have a look at silver very shortly as well. I'm just going to take you out to also the volatility index. Now, this is another chart which is also worth just bearing in mind at the moment. So this is the volatility index, otherwise known as the VIX, which measures volatility in the market, and it correlates to gold as well. So when essentially you see increased fear in the market, this is where you would expect the volatility index to go up, okay? And this also inversely correlates to the stock market. So the S&P 500, the Dow Jones, they are starting to get towards their tops at the moment. They're consolidating. We can have a look at them actually very shortly. But essentially, if we were to see the volatility index pick up momentum, you can see you've got a couple of hammers here developing. If we do see the volatility index pick up some momentum today, break above yesterday's high, start to grind higher here into the close, that would start to lend support here for gold as well. Fear in the market is very positive for gold price. So if we do see the volatility index increase, which is not really continuing to break down at the moment, is continuing to hold around this current level of support. If we see the VIX, the volatility index, go up, I would expect that to provide support here for gold as well. So if we just move over, and you can see gold slowly but surely is grinding higher at the moment. I'll just move it over and we'll have a look at the S&P 500. Yeah, currently S&P 500, it topped out again, reached all-time highs yesterday. We're just consolidating, been consolidating pretty much all week. If the S&P 500 Dow Jones just halts around this level, we could start to see this roll over. So that is worth bearing in mind. Now, bringing you back to the point, and one of the reasons which we were looking at for a potential breakout trade here. Reason why we're slightly late coming onto this session is we needed to get some trades out before coming on. You can see here, sugar is ramping up. So again, this is a trade opportunity right now. I can't go into detail on entry, exit, take profit. If you want to know, just make sure you stay with us until the end of the session. So there are some good trades lining up on both sugar right now. You can see it's ramping up. You've got this bull flag formation. It's just about starting to break out, and it's really getting going now. So I suspect over the course of the next hour or so, we're going to see this momentum pick up. Also, just have coffee on your radar as well. Again, both of these markets have a lot of strong investment demand. So we've got money managers, hedge funds have got record net long positions at the moment. We're seeing very strong inflows, the strongest inflows in over 10 years. It's the biggest inflows that we've seen into soft commodities since 2005. So I suspect they're getting ready for their next leg up. In fact, even cotton at the moment is getting bid up right now. You can see we've already breached above yesterday's high, so we're starting to ramp up again. So I would definitely have these markets on your radar, and especially sugar today. Sugar's a great market. The spreads are really tight on this market. If you don't have it on your platform, we can assist you to get set up with sugar. It's been up over 30% in 2016. If you're not seeing many trade opportunities at the moment in the FX markets, which a lot of those are continuing to consolidate right now, even off the back of Mario Draghi's speech, we're not really seeing sort of volatility that is ideal. You definitely want to have a look at commodities because they are starting to ramp up, especially the softs. Now, also just moving along over to silver here as well. Silver continuing to hold on to underlying support. It retraced back down to 23.6 Fibonacci. Also the 21-day moving average. We are holding on to its previous swing low, which is where we saw silver get bid back up on non-farm payroll. So that did provide a nice supportive bounce. We definitely saw buyers come in at the 1922 level. Again, watching both gold and silver carefully today to see if they can continue to grind higher here. So I would be watching these very closely, because what we might continue to see is just buyers slowly come in over the course of the US session. Silver and gold have both been very quiet from Monday through to Wednesday this week. In fact, even Thursday, Friday last week, they had quite a big pullback yesterday, but they're starting to get bid back up again. So again, I would really have those as the hot markets to have on your watch list right now. We can just break down quickly gold to have a look at the tighter time frames here. It's starting to ramp up, so I would be interested to see whether gold can follow through and get a bit more upside here. It needs to break out of you've got an overhead trend channel at the moment, so we're looking really for a breakout above the 1340 to 1345 zone. That is the level I would be looking at the moment. I'm very interested in here for gold currently. Now, other markets to have a look at. I'll just quickly head over to light sweet crude oil as well. So light sweet crude oil, we did hit one of our profit targets on this trade just yesterday. For those of you who've been joining our weekly sessions for a while now, you will know that we've been short oil for a while. We called actually the top here, which was 52 US dollars per barrel. You can see on higher time frames, US oil has continued to break down. It's been grinding lower. You've got lower highs, lower lows on the weekly. We've just had that trend in place over really the last 6 weeks or so now. After the first leg up in a bull market, which is what we've got here in 2016, with oil, a correction, a typical correction would take us down to between 30 to a 50% correction. So far, we are in the region of a 30% correction for oil. I do expect more short-term downside here, particularly if we can crack below 45 US dollars per barrel for light sweet crude oil and close below that level as well. That would be an indication that we could then, we've got quite a lot of clean air there where we could get a $2 to $3 move lower. So again, we've got longer term positions on oil. We've been shorting oil since it topped out at 52 US dollars per barrel. It has been a slow grind. It's just really been grinding sideways, ultimately creating lower highs, lower lows on the higher time frames. So it's just been a slow grind lower, but really it came really started to break down about a week and a half ago, where on the Thursday session we had a significant dip lower. Okay, fantastic. So with that, let me just bring you back to some of the key trades that we have had over the last week. So just bring up the presentation. We'll go through our portfolio performance using the exclusive research-driven strategies at the Gold and Silver Club. So first of all, Palladium has been a really nice trade over the last week. In fact, we saw Palladium break out again today. We caught this once we broke through the neckline of Palladium. Lovely W-shaped pattern here, broke above the 2016 highest levels in a year and a half. We exited that trade yesterday where we came up to our profit target for 520 points profit on Palladium. Again, cotton, we caught a runaway move on this after we breached through a significant area of resistance. This was a swing trade for 620 points profit, came out and hit our profit target last Friday on that. And since then, actually, we've just seen cotton consolidate, but it is starting to line up for another opportunity. And light sweet crude oil, we also hit another profit target on this yesterday, where we dropped down to a key level, which was at 44.85. We hit our profit target for 365 points. So again, if you would like to just get access to all of the trades that we take at the Gold and Silver Club, we get this question a lot. And it's a fair question in terms of you'd like to get the real-time updates with the entry, the exit, the take profit. You'd like to know what levels we are getting into our trades. If you would like access to highly profitable live trade ideas shared with you, ready to implement, rather than doing all of that hard work to find them yourself, either if you're a new trader and you want to develop a solid understanding of the markets and fast track your results, or you might be experienced with Forex or with trading the stock market, but you really want to take your trading to the next level. You see the opportunities in commodities at the moment, but you're just not quite sure how to get access to the markets. You're not quite sure where you should put your entry, exit, take profit. You know they're heading into a bull market, but you just need a little bit more clarity, a bit more training before you can start taking trades on them. Volume calculations, risk management, all of that we can help you with at the Gold and Silver Club. So the private members live trading room at the Gold and Silver Club, that includes exclusive weekly live trading room webinars. You get live trade recommendations ready to implement, real-time trade notifications by email and SMS, so you don't miss any profitable trades. You get exact details of where to enter, exit, place a stop loss on each trade. You get live trade support to help you through each setup, customized technical charts and indicators to boost your win rate, and exclusive access to our proprietary trading research to give you the ultimate edge in the market. So all of that you can get access to via the private members live trading room. All you need to do is go to www.jointhegoldensilverclub.com. Okay, so once you've completed the application form, we will get in touch with you ASAP. So again, it's just www.jointhegoldensilverclub.com. Okay, fantastic. So with that, we'll just head over to some questions. And yeah, if there's any other questions at all, do keep those coming right now. I'll just take a minute to read those and we can go through those, guys. Okay, good. So I'll take a couple of questions on gold and silver, and also I'll take a question on sugar as well. That's fine. So, right, with reference to gold and silver, watch them this afternoon. Now that we've finished. Mario Draghi has finished his speech. We've also had the interest rate decision. Most of the data today is out of the way. You can see gold right now. Okay, let me just flip it back to gold. Gold is getting bid up, and you need to watch out for these slow grinds higher. So have a look at gold right now. You can see it's ramping up. It's at 1,324 US dollars per ounce. If this just keeps grinding higher over the course of the US session, ultimately we form a bullish engulfing candle and we take out yesterday's high. Pay attention, because that could be a really nice entry opportunity here on gold. Now, I won't go through the exact entries, exits, stop loss, but have a look at this trade. You can see it's already starting to break out to the upside. It's just going to be a slow grind at the moment. So keep an eye out for gold at the moment, particularly if we can get to the highs of yesterday. That would be a very important area to have a look at. Also note, silver at the moment has also recently corrected down to 1922. So what you have to remember on silver is silver has entered a bull market in 2016. Silver has been up over 40% in 2016 so far as we've entered into this current bull market. The last bull market we had on silver was between 2008 to 2011. It lasted 2 years and 5 months. And what did silver do during that period? It produced a 480% return, okay, during that bull market. And we have come out of an even more significant bear market over the last 4 years, where silver is just warming up right now. It's been up 40%. And in fact, over the month of April, it gained over 16%. And last month, again, this capitulation, once it got above $18 per ounce, we saw a huge follow through, a $3 move in a matter of 3 sessions, in 3 days. So silver, you want to watch this because there's a lot of investment demand and a lot of appetite for silver as well as gold. So obviously you want to wait for the correction to be over, but if we get supported at this key zone right now, watch silver to see if it continues to grind higher over the rest of the US session and into the close, because there could be a nice opportunity coming up here. Gold as well. I mean, gold's still ramping up actually, 1,323 US dollars per ounce. And also keep an eye on the soft. So that includes coffee, sugar, and cotton are the three where we're seeing the most investment demand. So those are the three that you really want to pay attention to. But again, we get a lot of questions. So after we finish these sessions, we get a lot of emails and questions coming through, and a lot of those revolve around which platform do you trade these on? Which prices should you enter? Where should you put your stop loss? Where should you put your take profit? How do you manage these trades? What volume should you use? What should be your risk management? What percentage of your account should you risk? How do you diversify your portfolio? All great questions. And of course, we can help you with that at the Gold and Silver Club. So again, feel free to get in touch. It is just www.jointhegoldensilverclub.com. So going back to gold, silver high, where to enter in gold? You missed the 1,310 entry. Yeah, again, look at gold towards the US session into the close today as well. I'm looking for a breach of the weekly high. So yesterday's high and also above Monday and Tuesday's high. So just plot that on your chart and you'll see some nice potential entry areas at that zone. What you want to avoid is the potential. We're still got a lower high and a lower low on gold at the moment. So it really needs to breach above a previous daily high at the moment. So gold, if we have a look at the gold chart, have a look at this right now. Let me just bring that up for you. We don't have confirmation at this point. So although it's ramping up, if it just holds like this and then tomorrow we open around the daily highs and just grinds lower, you've still got a lower high and a lower low on the chart. It needs to do some work. It is looking positive for gold right now, but it does need to do more work in order to confirm this move on higher time frames at the moment. But watch it, because gold could continue to grind higher today. Joe, that's a good question as well. In fact, the charts that we've got on the screen at the moment, these aren't our charts which we use with everything that we utilize at the Gold and Silver Club. So you've got some slightly different indicators here. We can't go into depth and reveal every single indicator that we use during these sessions. Of course, if you're a member of the Gold and Silver Club, you get access to that as well. But Joe, yeah, just to answer that, we use a variety of different indicators. These are slightly different in terms of the indicators that we're utilizing than when we are doing our live trading rooms. And gold, silver high, hopefully that has answered your question as well. Yes, of course. So, yep, it's www.jointhegoldensilverclub.com. The dollar index. Okay, let's bring that up. So we can just have a quick look here and move it over to the dollar and see how that has performed. So the dollar's been interesting today, actually. The dollar initially pulled back. It's currently, we had a rejection candle actually forming just yesterday on the US dollar. Today it pulled back and then it's come back up with, you can see it's got a rejection candle. Very interesting to see how the US dollar actually does over the close today as to whether the US dollar is going to hold above its recent breakout. If you look at the weekly charts here, you will see that we broke out, in fact, above important overhead resistance just yesterday. And so far, we've got this reversal pattern, which is starting to develop. If we close the week above 97, that will bode well for the US dollar, potentially more upside, which could create more weakness in currencies which are trading against that. So I would definitely keep an eye on that, but it's not having too much of a negative impact on the metals today. The rise to the upside is certainly not having a negative impact on gold and silver right now. Yes, no problem. And lastly, I will just put it on to sugar so you can see that. Yeah, this is sugar. So you can see it's ramping up. So again, absolutely, if you've got access to sugar, make sure this is a market that you've got on your watch list. It's really started to get going. We've been watching this for the most of this week, actually, while sugar has continued to consolidate. We've got long-term positions on sugar, which are significantly up in 2016. Again, we continue to see very strong investment demand for sugar. This is an opportunity to get in before the next leg higher. So again, if you'd like to learn how to get into this entry, exit, take profit that we are taking, absolutely, we can provide you with that as members of the Gold and Silver Club. But right now, keep an eye on sugar. If you don't have access to this market, feel free to get in touch, guys. Okay, so the question coming up at the moment, can gold pull back again to 1,310 US dollars per ounce? Right, so if gold pulls back again to 1,310 US dollars per ounce, given that it's rallied up to about 1,324 today, that would mean it produces a rejection candle. So if it did do that, let me just show you gold. And at that point, you wouldn't want to get in anyway. So if it did that, that would mean if gold came back to test 1,310, it would essentially look like this into the close. It would have an inverse hammer or rejection candle, and then it's primed for a retest of 1,300. So essentially, if gold does break back down to 1,310 US dollars per ounce, I would step aside and wait to see whether it can crack below that level and get back to the 1,300s. A retest of the 1,300s and a supported bounce at that level could be very lucrative here for gold to load up on a next position, because there are a number of confluencing levels around 1,300. It may not pull back if it just continues to grind higher from here, closes near its daily highs. This could be it for the recent pullback, and it could start to ramp up overnight during the Asia Pacific session or into tomorrow as well. Also, I would keep an eye on the weekly close here as well. So let's just see how it's looking on the week. Yeah, I've got quite a lot going on this chart. I think I've got a raw chart somewhere, but I'll work with what I've got here at the moment. Let's just have a look at this. Yeah, essentially, if gold can close back above last week's low here, that does bode well for gold as well, especially if it can close the week with a strong rejection candle as well and get back above this trend channel, which we've got on higher time frames. If it does that, that will also bode well for gold from a technical perspective. So I would just keep an eye on that at the moment as well. But essentially, you want to be watching gold throughout the rest of the US session. Now, if you trade gold a lot, I would be looking for this to potentially continue to grind higher. What would be good for gold for a long would be if it closes at its daily highs, and if it was to take out yesterday's high, or at least manage to climb up to yesterday's high into the close. That would work very well for a move up. if gold was to retrace back to 1,310 US dollars per ounce, it would then produce a rejection candle, and I would suggest you just want to step aside and wait there for a potential move lower again. Okay, good. So with that, guys, I think that's pretty much all the questions answered. Thanks for the contribution. Some good questions. Joe, thank you. And Gold, Silver, High, all very good and relevant questions. So with that, guys, good trading. Have a fantastic end to your week and good weekend also. And of course, I look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Okay, thanks, Mauricio. Thanks, Adinda. Take care, guys. We'll speak to you very soon. Okay, thank you, everyone. Bye-bye.